Monday, November 27th, week after Thanksgiving. And I hope you guys had a great Thanksgiving. I did. Worked out really nicely. Now, I start out with the stock market indexes and I go to futures and sometimes some cyclical analysis, sometimes some forex and or crypto or sector markets. But definitely the indexes, the overall market, and the major futures, 24 of them. Let's go. The E-mini I start out with usually is overbought like crazy. We have been overbought now for the longest period of overbought sessions for many months. This is the futures contract, so I really can't gauge it. It gets too thin when you go back approximately a year, maybe a little bit less. But take it from me. We haven't been this overbought for this long for a long time. So I have to use the phrase, they're cruising for a bruising. This is very, very susceptible to a sharp break. Almost all of the rally, half of it was in one single day. And for the last week and a half, yeah, I know it's the holidays. We haven't made that much more progress. But look, we're in a major area of resistance and we're overbought. A couple of my favorite combinations. Now, the spider, or the E-mini we're looking at the moment, did not get above the high of yesterday and or make a new high for the trend up. So we need that in order to have a bearish engulfing. If it gets above yesterday's high, Friday's high, and then gets lower than Friday's close, we'll have a signal. It has to stay that way on the close. But I think it's going to happen anytime now. I know I've probably been saying that for a week or two, but if you run after the market now and start buying, you could be terribly surprised very quickly, and that won't be a good surprise. Next, spider. Didn't get above the high of yesterday, Friday I meant, which was a, short, less volume, inactive, holiday kind of day. So I really would like it to get above Wednesday's high, the day before Thanksgiving, and then turn down. I'm not sure I'm going to get that, but right now we're climbing, and the spider is only down on the day 21 little teeny weeny tickies, hardly anything. We've already been below yesterday's lows. So what I want is more weakness. We're in an area of resistance. We're very close to the previous high, which we did get a fantastic sell signal, ER sell signal on the exact high July 27th. And of course, we got a buy signal on the October 13th low of 2022, the bottom of the bear market, to the exact day. So I think we're about to start to go down, and I think we're about to start to go down to at least 421.5 to close this gap, the larger one. But there is a chance that we could come down as low as 431 during the next few weeks. Why is that important? Because Santa Claus is coming to town. We have the Santa Claus rally coming up. 2 years ago, it made $3,000 in a couple of weeks. We peg to the exact minute when to buy on 3 different days just before Christmas. And I will take you through that exact detail very soon in the next week or two, certainly in time to execute the trade, if you wish, before Christmas. We're working on the updates. So I'm looking for a top. It's not a big one, short term, and I still think this bull market is very healthy. But bull markets have downside corrections. Next chart, S&P 500 1-minute chart. Well, we made the new high for the day a little while ago. It is currently, by the way, 9:53 California time. And this high was made at almost 9 o'clock, so about an hour ago almost. Now, I think it's going to turn down. That's all I can say. Overbought in resistance. Next chart. Again, overbought in resistance. Now, the Qs did make a new high for the whole darn trend since the bottom of the market last October 13th. It's not going anywhere though. Usually when you make new highs for a trend, you shoot up, maybe get overbought like it did, but it hangs in there and starts to make new highs again. This time we're overbought and we're stalling out in this resistance area. We already have an outside trading range day, and we are overbought with a bearish, no, bullish at the moment engulfing. So all you've got to do, and we're now currently higher by 1.08, all you have to do is turn red, get lower on the day, and we will have at that moment a bearish engulfing ER official sell signal like the DIA I'll show you in a moment. The NASDAQ futures don't have a higher high yet, but if it makes it above the high of Friday, we'll have an outside trading range. And then if it closes lower, you got your sell signal, and we're going to start going down, in my opinion, for approximately 3 weeks. Next, and close some gaps. Almost all of these charts, I'm going backwards here, have gaps to close that are only about 2 weeks ago. And in some cases, a little bit longer term and a little bit lower levels also. Now going forward again to the DIA. We've got a bearish engulfing ER sell signal today in progress, period. We're short ER1 as of a few minutes ago. I'm looking for this market and all the other indexes to continue to work its way lower. And with the DIA, I've got my first downside objective being 344.40. That's to close that sizable gap about 2 weeks ago. By the way, we also had a sell signal before and it didn't work. We had a small loss. This one I hope works great. We're about to find out the next few days and weeks. The Russell 2000 also has a very big gap to close at lower levels. It stopped being overbought when it went up to and a little bit through resistance. And so far it's had a big problem in this resistance area. I'm looking for it to turn down and close the gap down to about 170 in the next couple of weeks. In this particular case, we have a head and shoulder bottom in progress. So getting down to 174 approximately in a few days just might stop the decline because that's the neckline. And if the head and shoulder bottom is correct, our minimum upside objective is 189.70 or 80 or more. And theoretically, you're not supposed to go below the neckline after you've closed above it, and we certainly have. This is absolutely classic pattern behavior. So I'm not so sure it's going to close the gap on the Russell 2000. Next, we've got the 2000 1-minute chart holding very flat, holding very steady. And I'm about to go to the futures markets. Here we go. The E-mini from a little bit different perspective. And October 13th bottom buy day, exactly to the date. And the top of the market on the E-mini, of course, like the spider, to the exact date, July 27th. Too bad we didn't get a buy signal at the bottom here, but it was oversold and in an area of support, which again is one of my favorite combinations. And here we are, we're overbought in an area of resistance. It's the exact same opposite. If you're not used to being a technician or a chartist and watching markets fairly closely, then you don't get convinced that this is probably going to go down right away because you haven't seen it happen again and again and again. I've been at this over half a century. I've seen it more than once. Next chart is the NASDAQ, overbought, almost an outside day, not quite, but a possible double top. I don't think it's going to be a double top. That means that you're going to break out below this low that was made on October 25th and then go down to about 12,500. No, not going to do that. It's going to go down maybe halfway, somewhere into this support area, and that'll be just before Christmas and turn back up, maybe making new highs very late December, I hope, which would be immediately, you only got a few days after Christmas, but maybe early January. I've been bullish for way over a year. on these indexes. Bonds, higher on the day, doing pretty good. The support level, which was incredibly profound, you know that this level of, what was it, 112.12, I believe, was the low, I believe, 4 days out of 7 in a row. And one of those days is only a tick or two higher. So you could say that 5 days out of 7, this market, or 6 actually, excuse me, out of 7, the market held at almost the exact same tick, and most of them were the same. This is doing extremely good. My first major resistance area is 119.12, give or take a half a point or so. And then I think we're going to continue to trend higher, but that could cause a minor downside correction. Remember, we're not too far away from overbought, and I rely heavily on oscillators like RSI. It's my custom version. It's similar to Wells Wilder's RSI, but not exactly the same. There's about 3 significant differences, and I learned RSI directly from Wells himself. We were both on the international lecture circuit, the CompuTrack, TradeStation, etc. circuits, lecturing for decades. Next, 10-year notes. Pretty much the same commentary for bonds. We did get a buy signal. We did get long, and we still have that long trade. This was an ER3 trade, and we're still doing fine. Still making some very good money in this trade. It did build a head and shoulder bottom that is a little lopsided. It is attacking the neckline, but not successfully so far. You got above the line, and it closed back below that line. When we close above the line, we're supposed to go up to about, and I'm moving it over a little bit because that would be appropriate. It's supposed to be on the day that you break out. Almost exactly a minimum of 112.12, 112.13, I meant, and higher if it works correctly. There'll be a little bump and grind on the way up, of course, a little bit of a dip, probably starting around 112. I'm sorry, 110.26-ish. Next chart, crude. Got oversold in support, bounced Thanksgiving week, and pulled back down again. I think we're going to make new lows. This trend on a long-term basis is relatively flat sideways, but lately bearish, and I don't see any change in that yet. So I'm looking for somewhat lower levels, probably down to 66.60. Next, natural gas. And I'll pull, I don't know why I don't have enough data here. Just a second. There we go. So big sideways flat trading range, but we're challenging and making new lows. Again, not uncommon to get oversold under these conditions. So after maybe another day or two of oversold and new lows, we'll see a little bit of a bounce, but the trend is obviously down. It used to be relatively flat, but resistance levels stopped rallies. Support started to hold, but finally it's given way, and natural gas will probably continue to trend lower. Next, heating oil. I got to say some similar things here. Now, this does look like a double shoulder, head and shoulder top with the neckline I've drawn in. But the last time we were down to the neckline, we could have, would have, should have broke out to the downside. We didn't. And that was November 9th, the beginning of the month. Instead, we got one more bounce, which now looks like it could break out to the downside. The minimum downside objective should be in the ballpark, and I'll put my markers back on again, but should be in the ballpark of 214, 2.14, somewhere around there. And it may take a month. Next chart, gold. Up against resistance, almost overbought, not quite. So we might even make a minor new high here and get overbought in resistance and then turn down. We've had some unbelievably great signals in precious metals this year. Gold, we got the bottom. We almost got the high right there. We got the bottom right here. We got the high right there. We got a bottom back there. We got a top way over on the left-hand side of the chart right there. Profound as hell. Bottom right here. Great signals, most of which were this year and before, of course. Now, I can't rule out closing this gap way down here at 1,850. So that would be my ultimate downside objective at the moment if this double top does kick in. It has not yet, but this is how they start. I'd love to see overbought condition and a bearish engulfing. Next chart is silver. We are overbought. We are at a price level which is again a lower high, like this high, a lower high than the previous high, which was a lower high than the previous double top. So how about silver? We bought the bottom day, the high day we got short, the high day again we got short, the low day we got long, the low we got long, the high we got short, and the high we got short. Come on, next. We might close the gap up here in platinum. We're nowhere near overbought or oversold, but it's obviously having trouble at 947.5. So if we have a bearish engulfing here, we may not make it up to close that gap. Gaps are usually closed, I'd say over 90%, but sometimes they're not. And a few of the lower gaps on the indexes may not be closed from the last several weeks ago. Next is copper. We are missing one tick lower. Would make a bearish engulfing red ER sell signal, and I think it's going to do it before the close. So I'm expecting, but it hasn't happened yet, a red bearish engulfing that you'll see tomorrow, but we'll see, for copper. Then it's going to be coming down to make new lows below 3.5 and lower. We got a great sell signal here on August 1st. Yeah, that was the most recent one, and a great buy signal on August 17th. Next chart, soybeans. We're still long from the bottom day. Not a very big profit at the moment, and we're not at the moment protecting very much profit. But again, these strategies, although they have default settings called inputs, they are adjustable. You can make them run or work faster or slower if you're a longer term position trader or investor. Faster if you're a shorter term swing trader. And we do have, of course, a scalping version, day trading version, and a shorter term as you want. You just change the scalps. The entries are phenomenally accurate. I don't know of another system that will get you long or short on the high day or low day often, very often. And I guarantee, period, that I can explain how and why, what it does and what it, and etc. Next is soybean oil. Great longer term short sell. We're out of it a week or so ago, week and a half ago, going up and down a little bit here lately, waiting for more signals. Support held. We got to the minimum downside objective plus a little bit more, which was 50 from a head and shoulder top that worked great. Next chart, meal. Maybe we're looking at a broad double top here, and I mean a very large. That was last February when we topped out. Actually, March 7th, sorry. That's the exact high day. And just a few days ago, we came up to almost the exact same price, overbought conditions, and have started to turn down. If we start to close below the low on November 20th, and that low was on the continuation contract, 440.80 cents, then we're going to have a double top, I think. That'll be a downside breakout, dropping further into support, probably going to break out to the downside. And the ultimate downside breakout is dropping down below 364, and that would be very bearish long-term. Let's see that happen first. Let's get down quite a bit, and then we'll talk about a much longer-term bearish situation. But this could be the beginning of it in the last week or so. Next, corn has gone the way of wheat, and I've said this almost every day for a couple of months or more. So here we have a new low. Ever since the low was made around February 11th, 2022, way over a year and a half ago. This is the lowest lows for a year and a half. Now we're close to oversold again, no surprise. So we should be close to a little bounce again. That would be no surprise. But it'll probably stop at a little bit of a rally at resistance and turn down to another new low. Wheat has done it already again and again. And today, here we are, new lows to the trend again, as oversold again. So I got to say the exact same thing as I just said for corn. We could have a little bounce up to a little resistance and make new lows again, probably in the next 2, 3, 4 weeks. Next, cattle. Oversold second day now. Friday, day after Thanksgiving, got very oversold. And again today, coming off to about 19. That's pretty oversold. So look for a rally. Look for the start of a rally. It should be something similar to what we just saw starting on November 10th and starting on about October 24th. They were oversold conditions. They rallied. They didn't go very far, and they turned to new lows. Exactly what I'm looking for again. Next, hogs. Well, I got to say the same thing for both meats here, cattle and hogs. Oversold, now dropping below support. Just ain't holding. So we should be seeing prices of a lot of different objects, stuff, commodities, food, et cetera, start to decline. Well, that's a joke. Where middleman's going to be happy this Christmas. So hogs look to be heading south. I wouldn't be surprised to see the lows made in May broken, and that's basically 57. We're at 67 right now. So that's my expectation, a test of 57. Next, OJ had, while I was gone, a bearish engulfing sell signal, ER official sell signal. And the next day, it came up to our ER3 and got short. Small loss on the first short. Next day, very nice profit and making more money today, looking damn good. So we have an official sell signal that is now causing something like a double top. Not quite a real good example, but you have a gigantic sell signal that worked for approximately a week for a really big break back on October 31st. This bearish engulfing, a little bit higher, has all the same earmarks. So I am expecting a pretty hefty, substantial break. And it could be the one that breaks the OJ back, so to speak, and cause a break below 343. If we see that happen, wow, you've got a long-term bear market. Maybe they figured out how to get rid of this green tree disease, I think it's called, which has infected the Florida orange juice crop for a long time now and reduced the consumption and production, I meant. And really been a big problem. Next, cocoa. Sell signal didn't work. We had it about a week and a half ago. Got stopped out with a small loss. So the trend is still up. We got a rally today. We're very close to making a new high. Let's see if it can make new highs. I think it will. But I wouldn't be overly zealous on the long side. It looks like it's losing momentum. And I would not be surprised to see a sell signal of some sort surface soon. So I'm kind of neutral to friendly, but very cautious. Next, coffee. We're looking at a bullish engulfing at the moment, and support for the last several days has held pretty nicely today again. The trend has been up now since June with higher highs. I got to be modestly friendly here. Nothing, dramatically bullish, but modestly friendly. Next is sugar to sweet. Support is holding, kind of not very interesting. Maybe I'm going to get a test of 2780. Looks like it. If we start closing below today's low, that would cause me to expect a move down to 24.90. Next is cotton. Support held in oversold conditions. Again, one of my favorite combinations. Worked great for about a week. Topped out. And now we're starting to see the longer term trend persist. And I think we're going to break support at 76.80 and drop off to test the lows that we made back at 69.07, way back end of October of 22, over a year ago. And that is it for today. The E-mini is now slightly, the S&P Spider, is slightly higher, up 14 cents. We're up, but still down 55 cents on the DIA, but that bearish signal won't be a bearish engulfing ER sell signal if you close higher. It is definitely dependent upon a lower close. And if we do get a big break, now we're going to get another sell signal in the Qs. You have a great day. See you tomorrow.